Alright guys, what we're going to be looking at today is why a framework is so important. Learning a trade is not enough. You've got to have a framework to decide when those trades are going to come about. So a step-by-step process to find trades on a daily basis. I'll be looking at one of the trades in a moment that was kind of the foundation of the beginnings of my career. What it was about that trade, how I went about spotting that trade. I also give you a more recent example of that exact same trade. What this enabled me to do was then branch out, because having a framework enables you to scale. You can move into different markets. You can find trades more frequently. But without a framework, you've just got a strategy that you're hoping you find enough times to be able to make yourself some money. So today's session is basically a sneak preview into what we're going to be doing in the final fourth session of Consistency Decoded. Looking at what goes into a framework, how a framework allows you to scale, and how it provides step-by-step process to find new trades. So in that session, we're going to be covering this in more detail, looking at numerous traders' different frameworks and how you can become more consistent by applying a framework. The next session is going to be after Easter, so the 13th of April, 4 PM UK time. Now, I first started trading DAX very short term, more scalp orientated, but by building a framework to better understand the trades that I was taking, I was then able to find some much larger trades. Now, what this also meant is I can now start to scale this. I can start to branch this into other markets. That's where I started to trade oil a few months after trading DAX for the first time live. After bringing oil in and starting to develop new technical trades in oil, then continued this because you've got a framework now. I've got more markets to trade, more potential trades to take on. And this then brings me on to trading S&P as well. So by the end of my first year, I've got 3 markets, a clear framework for how I'm starting to develop new trades and different approaches for each different market. So let's go and have a look at one of those very first trades. This is a short-term 1-minute DAX trade, but it's the importance of understanding what goes into this beforehand that makes this such a good trade. Let's go take a look. Okay, so what we've got here is a daily chart on the left, 1-minute chart on the right. Now, the 1-minute chart is the bit that I'm focusing on. What I'm looking at here is the break below the little lows before the big drop. Now, what's significant about this is not the 1-minute structure, but that's how it started, a little 1-minute flag, and you're trying to play the break of that. But by adding an understanding of the bigger picture, having a framework to define that this is a much better trade, one that I want to be taking more risk on and be more willing to get into, this becomes a trade that is so much more valuable. And this is really the kind of stuff that I'm looking for. Using very short-term trades, little 1-minute strategies, and then bringing this into a wider framework to allow myself to then take advantage of much bigger moves. So if we go and have a look at the ladder, we can see the importance of understanding the scale of this trade and how that's then going to influence the way that you actually get into it. Where we are at the moment, we've just touched through that significant recent low at 14,784. Now, as you can see, not yet into the trade. I'm waiting for a bit of pace to come in. Now, it would seem that you're actually paying a long way down here. I have to go much lower to get into the trade. And ordinarily, I wouldn't be willing to go this much further, 30 ticks lower. But the scale of that daily break, bringing that into the wider framework, is what makes this trade still worth getting in. You know that there's scope for a much larger move here. And so with that scope, you're now much more willing to take the trade on. The macro narrative plays into this, and that's another feature of this type of trade in particular. But the essence of what you're doing is you're taking a very simplistic approach, little 1-minute flag, overlaying this within a broader framework of where the market is, where the where the bigger potential move comes, and then using that to define a very tight entry trade, which goes back to the advantage of scalping and how that can improve your entries on trades, to then try and maximize this. What I'm looking for now in this trade is the exhaustion. I'm looking for the market to really panic on the way down. At this point, it hasn't. We're around about 80 ticks lower. There's still potentially more. And so I'm waiting for that acceleration, that panic towards the downside. That again is part of the framework. The how do you get out of a trade? I'm not looking at this thinking, well, maybe here, maybe there. There's something specific that I'm looking for. I'm looking for that acceleration. I'm looking for the market to rush towards the downside. Once it does that, then we're out. But up until that point, this steady action allows you to stay in, stay in, stay in. We're now 150 ticks on side. That's where understanding the order, understanding what's going on is so valuable. Now starting to see it holding, starting to hold further, one more splash down as well. You're starting to see as well, getting very, very thin on the ladder in terms of the amount of volume traded per price. What that's telling you is that we are now seeing much, much less going on. This is the end of the move coming up. You've got this very, very sort of light drop now. Not a great deal trading, very light, very quick. It may only be subtle, but it's these little pockets of low volume that I'm then looking at thinking, right, if you get back above there, now the sellers don't have that strength. And seeing as they've been selling on very, very small size, this is now the time to be getting out of the trade. Willing to chase it a little bit, yes, but that's fine. You're happy to get out of that, happy to chase that. Yes, you're always giving up a little bit on these types of trades, but what you're trying to do is make sure that you're extracting the most out of the move. Cut and reverse as well. The idea of the cut and reverse is having seen that exhaustion, who's still selling it? And this is all the sort of wider part of the framework. But really, the initial part of this trade is just purely understanding the 1 minute technical structure and then using that to enhance your entry on a much wider daily trade. The final bit of it is once you've seen that exhaustion, seen the market now starting to play itself back up, now you've got the play to send the market all the way back. Not necessarily back to where it came from, but you're looking to be able to send the market back up to recent reference points. So there you have it. It's a simple trade, but put into a wider framework of considering the macro narrative, considering the daily structure, considering the pace that the market has got on this given day. This is then a trade that has so much more value. And that's how you can define the really high quality trades. You can use this then to branch out into other markets. Oil at the same time, for example, is doing some much bigger moves. And again, that's another area that you can then move into. So there we have it. There's the reversal. The reversal is very much more a short-term scalp trade. You're trying to take 30, 40 ticks out of this, and then you're out of the trade. So there we have it. Taking a very short 1 minute setup and turning this into a much, much bigger trade. That framework then allows you to scale this into other markets, move it into things like oil, S&P, anything else that has that volatility and that pace in it. Okay, so if you want to come to that final session, click on the link below. We'll also be running a prize draw in that session, so you will get a free day of trading with our team, seeing what our traders are looking at, what they think is important for the day, and what trades they're going to be taking. So click on the link below. We'll be covering framework. We'll be covering lots of detail on different approaches to this, how you develop framework and how you build a framework going forward. I'll see you there, 13th of April, 4 p.m.